Yo traders, what's good? Just a quick one before I get into the video. If you don't know about Switch Markets, then you better get to know. They're doing a crazy promotion right now. They're gonna match anything that you put in the account up to 5 grand and give you 100% bonus. Also, they offer 1,000 times leverage. I don't advise any beginners to be using that, but let me tell you right now, if you want to flip a small account, this is the place to do it. If you want to live trade with me every single day for free during the New York and the London session, then feel free to join my Discord. It's literally free, and I've just started it, but I promise that it's going to be super duper popping by 2025. So get in there now while you still can. Without further ado, let's get into the video. Yo traders, what's good? Welcome to the channel. So today I'm just going to be breaking down the MambaFx strategy on the 5-minute and the 15-minute time frame. The last video I did on it was the 1-minute time frame, which for a lot of traders can be really tricky and a little bit scary to get used to in the beginning. So let me just break down another way of looking at his strategy and making some money using it, okay? So let's just look at today for an example, which is kind of perfect. So I'm going to mark up New York Open, which for me is 2:30 in the afternoon because I'm in the UK. So usually I'm looking for a breakout, but on the New York Open. This happened before New York Open. For people who's waiting like Mamba does for the New York Open, you're going to be waiting and you already missed the move because it broke like 15 minutes before the Open. It broke 15 minutes before the Open and you probably missed the move, right? So what can you do? There's a few things you can do. The next thing you're gonna be looking for is the break of this area or the break of this area. Now you can either do that and you'll still catch some pips because look, you know, if you just entered and thought, right, it's still going down, stop loss super tight, boom, you could have got like a 4. Or if you closed on the candle close, you could have got like a 3. It's cool. Still money to be made. But what I would have done and how I would have approached it is like this. So I know pre-market open, I've already missed the big move. Look at this. It's just straight bearish candles. What am I going to do? Am I going to think price is going to carry on going down? Or am I going to think at some point price needs to come back up? Well, I'm thinking at some point price needs to come back up. So when I see this wick, then I know, okay, price is probably done going down for a minute and wants to come back up. Soon as I see that wick and I know price is coming back up inside, I'm getting in. And my stop loss is super tight, so I probably would have just got out there. I would have got out there. You put your stop loss there, which that's what you really should be doing. And yeah, you get back in when price starts going bullish. All you're doing is targeting these imbalances. If you go to the 15-minute time frame, there's an imbalance. If you don't know what an imbalance is, it's cool. This video is not about imbalances, but there's an imbalance somewhere like this. So let's just not get too techy. Let's go back to the 5-minute time frame. Remember now, all you need to look at is price was coming down before New York Open. So it's likely that it's going to come back up to like make some corrections of some sort, right? So I'm looking to buy. I'm not looking to carry on down. So look at this. This is another perfect example. So pre-market open, this happens. This happened at 1:30. Now, look, there was news. There was high impact news. US core CPI. Push price up rapid. Now, you got to remember, New York Open is there. So this whole move happened before New York Open. Boom. What am I doing? Am I gonna put my my breakout line there and think, right, on New York Open, if it breaks above there, I'm carrying on up? No. The only thing I'm interested in doing now is looking for the break to the downside. So on New York Open, we get this little wick up. Like, oh yeah. Remember what I just said, I'm not looking for buys. So people get stopped out there. They think, oh, it's going to carry on pushing up. And reality is, you've just done this big move. Look at all these blue candles in a row. Like, why do I think it's going to carry on going up? I don't. So all I'm going to do is wait to see price break this level and come back down. As soon as I see it end like this with a big wick, it's game over. I'm coming down. Let me move this out the way so you can see the wick. See this wick? Because I know I'm not looking for buys because we've already had this big move. As soon as I see this wick, I'm entering. I don't even need anything else to tell me to enter. I'm just getting in. Super duper tight stop loss. Putting my whole account on this one, actually, because I'm so comfortable. I'm only joking. Never put your whole account on anything. But yeah, I'm confident basically. And boom, look what it does. It just melts. So if you get a big move before New York Open, this is the breakout. This is the breakout that I usually look for on the New York Open. It's already happened. I'm not looking to carry on in that direction. I'm looking to come back down. So let's look for another example. Let's do the 15-minute time frame. So this is the 15-minute time frame. We're going up. We're in this beautiful uptrend. Price comes down. Boom. This is a big ass breakout. Now, if this was on the New York Open, I would have been in already. I wouldn't be looking for no confirmations. I'm just buying the break. But the break happened before. The break happened 45 minutes before New York Open. So I know price didn't want to go down. It's just done this big move. Only thing I'm looking for now on a New York Open is a break to the upside. So as soon as I see a little bit of bullish volume, I'm in. Stop loss super duper tight. I'm getting out on the close of the candle or wherever. You could get out on the wick when it starts like losing momentum and coming back down. I hope you're getting the picture by now. Like, I hope you understand that it's okay if you miss a move before New York Open because of news or it just happened that way. It's okay because there's ways to enter and still capitalize on the New York Open, but in a different way. We're not looking for breaks to carry on in that same direction and shoot to the moon if it's already made a big move. So maybe this is an example too. We're in an uptrend, 15-minute time frame now, mind. So 230, where are we? 230, there's the open, right? So we got the breakout before New York Open. Once again, bearish. So all I'm doing now is looking for buys because we had this big move down. Soon as New York opens at 230, I'm only looking for a buy. And look what happens. The open is just boom. It's just bullish. I just know that I'm looking to come back up and either get inside this channel again or at least take out this bearish candle, the one before it. So soon as New York opens, I know this big candle. As soon as it opened, if it started like pushing down bearish, then yeah, I'd carry on. But I just know they just had this big move down. There's going to be imbalances that need to be filled. Simple. Without getting too crazy with it, I'm looking to come back up. That's it. 1 15-minute candle. I'm done. As soon as I get back to this area, you could even say this is a retest of structure, whatever, I don't care. But if you held the position because you knew the move was down before the open and now we're going up, look. So it's okay to miss the New York Open. You don't need to catch that break, but that's where I like to be in like 15-second, 30-second trades when there's no volume before the New York Open. We're literally just moving like this. We're just doing this. This is New York Open, before New York Open. We're just doing this. No crazy moves, just a consolidation. And then say this is New York Open. Whichever way it breaks out, I'm entering. So if it breaks up above rapidly, I'm entering. And you know, if I get faked out, that's cool. That's fine because it's just liquidity getting grabbed. I became a part of liquidity. I trade twice a day, so I'm okay to take the 2 L's if I have to. But the second time, I'm usually right. So if it sweeps me out, boom, I'm coming back down with it. So I'm just looking for no volume, literally consolidation before New York Open if I'm waiting to enter on the break in New York Open. But otherwise, if there's some big moves, some news, some crazy volatility, I need to wait. I need to make it make sense. I need to think, right, like imagine this was New York Open. I mean, 15 minutes before New York Open, we just went all the way up. Boom. Why am I going to want to carry on going up? The only thing I'm looking to do is sell back down. So you're just looking for another little area that could break. This would be my area. Boom. As soon as I see this little push down, I'm in. I'm literally in and I'm just monitoring the trade. And I can get out whenever I want. That's the beauty of scalping. That's the beauty of the MambaFx strategy. Yeah, these are the 5-minute and 15-minute examples. But I'd only trade the 1-minute time frame using the MambaFx strategy if there's no volume and it's really dead and it's consolidating before New York Open. Otherwise, if you get those crazy moves, just think to yourself, there's imbalances. We need to correct things. Just look to come back down. Be patient. Don't jump in on FOMO. Don't be scared. Don't be like, I'm carrying on. It's shooting to the moon. Shit doesn't work that way. It rarely ever happens. So I hope this video helped. If it did, then sub up, smash the like button. And yeah, feel free to join the Discord community, which is now live. I trade gold during the London session every day, UK time. So that'll be like from 7 in the morning. I'll be on the charts and then I'll be actually live at like 8, 9 o'clock if there's a setup that I can see. And New York, I'll be scalping US30 and NAS100. So yeah.